Good evening, everyone. It's April the 25th. It's Friday. Today, Dow Jones Industry has increased 0.05%. Nasdaq has gained 1.26%. S&P 500 has gained 0.74%. And Russell 2000 went even. This week, Dow Jones Industry gained a lot, 2.48%. Nasdaq gained even more, 6.73%. S&P 500 have gained 4.59%, and the Russell 2000 have gained 4.09%. As to the sectors, information technology gained 7.93% this week. Consumer discretionary increased 7.44%. Consumer services gained 6.36%. The sectors that decreased is the consumer staples, which decreased 1.36%. Let's have a recap. On Monday, after last week, President Trump threatened to remove Jeremy Powell from the Federal Reserve Chairman position. On Monday, he called on Powell to lower the interest rate. At the end of that day, the S&P 500 ETF SPY dropped 2.38%. On Tuesday, first, President Trump said that the tariff with China won't remain at an eye-popping level for the long term. And then the Treasury Secretary, Scott Bessent, hinted there's a de-escalation with Beijing. Also, President Trump told reporters that I have no intention of firing Federal Reserve Chairman Jeremy Powell. That eliminated uncertainty for the market. The third good news comes after bad news. Actually, Tesla missed the quarter one results, but Elon Musk says that his time to spend at Dodge will drop significantly, and he will refocus on Tesla. Following those news, the market rose 2.6% on that day. Following Tuesday's news, on Wednesday, Magnificent Seven stocks added 455 billions to their market cap, as big tech stocks leading the way. Tesla stocks surged more than 5%. So on Wednesday, the market added another 1.55% for the SPY, following Tuesday's good news. On Thursday, the investors heard that Federal Reserve Bank of Cleveland President Beth Hammack said that the policymakers are considering a cut in June for the interest rate. The Dow Jones Industry average rose 1%. The benchmark S&P 500 gained 1.8%, while the tech-heavy Nasdaq rose nearly 2.5%. The Magnificent Seven mega cap stocks all gained on that day. For SPY ETF, it also gained another 2.1%. Today, the report emerged that China quietly rolled back tariffs on some of the US semiconductors, erasing the pressure on the tech sectors along with certain US pharmaceuticals. Google also gained. After bell Thursday, its revenue jumped 12% to $90.2 billion. net income surged 46% to 34.5 billion. And the company also increased its dividend by 5%, while indicate that it will have 70 billion in buybacks. Tesla shares also jumped today, extended its recently rally as the Trump administration loosened its rules about the self-driving cars. A lot of investors think this move will benefit Tesla because the self-driving cars is one of the Tesla's major growth perspective. However, a lot of people may not notice that the consumer sentiment is decreasing. The University of Michigan's latest look at these parameters found that the index come in at 52.2 for April. That is down from 57 in March. Let's look at the SPY's daily chart. This is a 3 months daily chart. From this daily chart, you can see that today this price is already over this gray box. So, but the solid portion of that is still within this gray box. When I say it is like effectively broken through, I mean we need to break through the upside of this gray box, which is about 549. We need to stay there for consecutively 3 days. If we see that, then I would say it's that definitely we are reversed the trend. At this point, it's too early to say. Also, as I already mentioned, the consumer sentiment index continues to drop. So this will give us an alarm that it may not be a truly reversal. Actually, at this point, if the trend doesn't reverse and continues to go down, or even getting a worse scenario that it continues to go down, then now it's a good time to sell or hedge your portfolio. Now let's take a look at Tesla. For Tesla stocks, a lot of people saying, "Oh, I cannot take it anymore. I'm going to use this opportunity to sell it." And then some people is saying that, "Oh, this is the self-driving. Get the rule get loosened, and it's time to buy." But from this daily chart, you can see that even with today's surge, it's still the solid part is still within this gray box. So what we really know is that we need to pay attention to the next couple of days, see if it can going up, stay above this gray box. If it can, then I would say it's a trend reversal. Otherwise, it may be just a best point to sell some or hedge some, because you see that there's 60 days moving average above it. So there could be a lot of resistance over there. Now look at it, the MACD looks like on the daily chart, there's a gold across, but normally the MACD is a little bit delayed than the RSI. At this point, I would still thinking we need to monitor it for a couple of days before we can confirm it's a reversal. If it is a reversal, then when it's coming back, then that's our entrance point. We need to buy over there. Now let's look at the Google. For the Google, this is also a daily chart. For the Google stocks, I think we do have a short-term trading opportunity here. We have formed the one triangle here, and then the second triangle with here with the price get out of this adjustment range. So I think it's better also to observe 2 or 3 days before you buy in. But from today's chart, looks like it is possible trend reversal. Another stock I would like to look together with you is Costco. For Costco stocks, you can see that on the daily chart, the all those moving average, they are bunching together. Okay, so indicating we are in a adjustment period here. So with currently the market, I will wait for more signal, because we want to make sure that the market is in a clear uptrend or downtrend before we buy or short stocks, because individual stocks are always affected by the overall market. So like I said, and we looked earlier, the SPY, which is a reflex of the S&P 500, it is still, we are not certain it's a reversal. So at this point, with Costco, I will still wait. If we see all actually, when we see this daily price, if it's broken the upline of this adjustment range, which is about 995, and stay there for 2 to 3 days, then we'll be sure that the stock is in a breakthrough. And that's when with the time, when it's pulled back, we should look for the entrance point. Again, I'm not a day trader, and I normally don't suggest people to do day trading unless you are especially good at it. And under currently the market environment, I'm also not going to suggest to buy individual stocks. I have most of my position in the EDX, the index ETF, S&P 500, and also I hedge those large positions at this point until I see there's a clear trend. Then I will decide it whether I'm going to get out of the hedge position or I'm going to add more shorts if the market goes down. My general philosophy for investing is to follow the market signals. Thank you for watching, and you have a good weekend. I will see you next Friday.